Morning all. How are we all doing? How is everybody today? It's Wednesday, halfway through the week. All good? Morning Ian, morning John, Danny, JC, Peter, Amy, Bradley. Morning. Thanks, that's okay. Reading your comment. Morning Andres, morning David, morning Canley, morning Neo, morning Monkey, morning Virginia, Gregors, Mark, how are we doing? I was just bringing up the earnings today because it's Netflix and Tesla today. So it's the first, I mean, these are all big companies, obviously, but it's the first big reporting today. It's aftermarket, though. So the aftermarket earnings will affect the stock indices. But these two will affect tomorrow and potentially right at the end of the day. So when they release aftermarket earnings figures, they sometimes get released or get known about 10-15 minutes before market close. So the very final couple of candles are huge. So just be aware of that. If you're holding anything until the end of session, we might get some big moves. But we've got Procter and Morgan Stanley this morning before market. So these will be released at some point this morning. So just be aware of that. If you're trading the DAX, if there's sector purchases that come off the back of these, obviously that will affect the DAX as well. But these are mainly going to affect the US indices. So there's the first two biggies today. We've just had the CPI for the UK. Remained unchanged. So that is positive pound. It didn't go up, but it didn't come down. So basically, we were expecting it to come down. So that puts possible inflationary pressure on the pound for interest rate rises. So we might get another 0.25%. We'll have to wait and see. But Bailey obviously will digest that. The Chancellor's come out this morning and said some bits and pieces to kind of try and calm the situation down, but the pound's had a bit of a rally. There's no news this afternoon. We've got building permits, which doesn't do anything, and we've got two talking heads. So that's it for news today. There is no more news overnight today coming out. We have got overnight news going into tomorrow. We've got the Australian unemployment rate, which again is forecast to be pretty stable. So could have a big move off the Aussie overnight. But that's it for today's news. All done. Overnight news. I was just scanning back through. Obviously, there's a hell of a lot going on with this conflict expanding, with this hospital being hit now. Who shot doesn't really matter, does it? Iran are definitely getting involved by the looks of things. It looks like it's going to blow out of all proportion, which is really going to affect oil prices. Oil gapped up this morning again. So another gap up on oil on the escalation. So potential gap fill in play today, and or a gap and go. See what happens today. But so overnight news, there wasn't much that I could see of any interest here. Interestingly, there wasn't a lot about the Japanese situation. So the Bank of Japan didn't say anything overnight that I could see. I did scan through. I'm just scanning through again just to make sure I didn't miss anything. But so yeah, quiet on the Western Front from Japan's perspective. So then we come straight into the UK CPI this morning. And then basically Chancellor Hunt's basically said it's unusual for inflation to drop in a straight line, which we know it does fluctuate a lot. But the target is 5.8 by the end of the year. We are sitting at 6.8 now, 6.7 rather, with no movement. So we've got to get it down 0.9% month on month over the next 2 months for them to hit target for inflation. If not, they're going to need to definitely put interest rates up. They might do it anyway. So could be some moves to the upside on the pound today. So far movement, if you look at the pound, we've had a little bit of a spike off of the news, but no real big movement off that So it's all retracting basically, but there was a positive move on it. So we'll see where we go this morning. DAX today, there's no gap. Well, there was a tiny little gap filled straight away. So we've got 2 minutes to the open. Downside potential on the DAX today, whoops, wrong one, is very easy. Yesterday's low and the previous day's low, pretty much the same area. So this is where the market is buying from at the moment, which is out of this previous balance where we had a price discovery, failed. We've come back into balance. So they're buying this area back up again. The US dollar, again, this is very, very tricky at the moment. The US have said that they're going to go in if Hezbollah go in on Israel. So basically, the US has pledged to defend Israel. If Hezbollah start to attack, they're already having fights at the borders. They're chucking rockets in. If they go in to Israel, the US will go in to Israel as well and defend. So if that happens, it's going to have a big impact on the US dollar. Which way the US dollar goes will have a big impact on the indices. The indices will tend to go in the opposite direction. So we've really got to keep track of what's going on with that situation there, because if it all flares up, oil's going to fly, the US dollar is going to move, Swiss franc will rally into safe haven, the stock indices will collapse. So it's a very touchy time at the minute. I would say we are looking slightly more bullish across the board on the indices. Not on that time frame, but it looks like we're kind of starting to rally out of this pullback potentially. So we're looking at that being the move potentially, but we'll see. World events obviously rule, so things will change on a dime, as they say. So at the moment, we're coming down on the DAX pre-market. So watch this level to the downside, which is within ADR. That's last week's low. So they're basically not letting last week's low get touched at the moment. They're buying it up. So watch this propulsion gap from yesterday, which was the big move for potential additions. So this area here, basically. And then upside, we've obviously got yesterday's high, which is not far away at all. Yesterday's high's there, obviously. So we'll probably find some limit triggers there. But if we are going to rally long, we'll probably break that. And if we do break that, it's exactly the same as I said yesterday. There's room, loads of room, all the way up to ADR. So we'll see where we go. But it seems to be selling off pretty hard at the open. So we'll see where we go. Morning, everybody else. Haven't said morning to. Outro. I've got some shares in Tesla. Hopefully they report positive today for you then. Morning, Mumo. Morning, Day Trader FX. Amy, what about Eurozone CPI later? Eurozone CPI is not really that relevant. So if that'll be yellow news. What's the day? Wednesday. There we go. So Eurozone CPI is yellow because it's already a known entity. We've had the Eurozone is made up of Germany and France, pretty much. We've already had the CPI figures for Germany and France, so therefore we know the Eurozone. This is why it's yellow news. It can fluctuate if you look at it, yeah. So you can see that virtually every time we get this figure, it's as forecast. It's very rare it misses because we know it. It's a known entity, so therefore it isn't actually news. It missed by a 0.1 there, missed by a 0.1 there, missed by a 0.1 there, missed by a 0.1 there. Other than that, it's always as expected. The only thing that will throw this out is if you have smaller countries in Europe having big misses, because the over 50% of the Eurozone CPI is made up from France and Germany. So if you have a small country missing by a country mile, it will make so little difference because their weighting is less than 50%. So it just doesn't. It's not an entity. It might move on it. You know, the market moves on news, so it waits for news events to come out before it starts placing orders. Not so much because it needs to make a decision based on that news, but because it knows there's going to be liquidity added into the market by other parties, and it needs to execute its orders. So it needs liquidity to place those orders. So you might get some movement around it, but it won't be directional in the fact that it will change what's happening. So no breakout so far on the pre-market 15. Look, DAX yesterday. I made money yesterday, obviously, just because I decided to get out when we were struggling to make any moves yesterday. Then it collapsed back down very hard, and then it bounced all the way back up to yesterday's high, and then came all the way back down again. So basically, if you want the definition of a rotation day, there it is. That's a rotation day. Pretty much the definition. So yeah, it didn't go anywhere yesterday at all. As the previous day, really. I mean, yes, the previous day was pretty much rotation as well. So down, up. We did end up as an up day, but rotation days don't have to be, dojis or anything. Rotation day is literally just we are non-directional rather than a trend day, which is that. Obviously, this is a trend day. That's a trend day. This is a rotation day. This is a rotation day. So yeah, nowhere yesterday. Hence the fact I think we might go for a little bit of a run to the upside today, but it looks like it's selling off. It was trying to anyway. So big rejection to the upside so far. Looks like I'm going to trigger short. There we go. Short on the DAX. So looking for a push down into propulsion. So this is the area we looked at on the hourly chart. So pushing down into this propulsion gap. And see if we can find some buyers in here somewhere to maybe start a new leg up. Either that or we're going to come and retest this low and we're going to stay in rotation. We'll see where we go. Afternoon, morning even. Martin, Harold, Freeman. Short DAX, yep. And I thought Ireland was the biggest influence on market movement in the EU, being the richest country. I don't know. We don't even report Irish figures, do we? They don't even make the calendar. So CPI, we have New Zealand, Canada, US, obviously the Eurozone. I mean, it just doesn't report on Ireland because it's just part of the Euro, because we're only reporting on currencies, aren't we? We're not reporting on individual countries. So good old Ireland. Hopefully one day they'll decide to merge Northern and Southern Ireland back together again and figure all that out. Morning, Daniel. Morning, Johnny. Do you own any shares? No. Yes, I do in BT, British Telecom. That's only because I used to work for them years and years and years and years ago. So I've got shares in BT that they gave me when I worked there. I worked there for 4 years, I think. So, yeah. But I own like 100 shares or something, which is worth like, I don't know, I get a statement through every quarter, I think it is. I get a letter from BT saying, here you go. Here's your statement, and it's worth about £80 or something. Don't know. If BT suddenly become a big multinational corporation and take over the telecoms from the entire planet, I might make some money out of it. But other than that, it's not even a meal. I was in my Binance account yesterday because in Binance now in the UK, you can't withdraw your money anymore, which is great. So I've got all this money in Binance, and the only thing I can do is actually transfer it into a Bitcoin wallet and draw it out from somewhere else like Coinbase. So I thought, what should I do with it? So I thought, maybe I'll stick the whole lot in Bitcoin. So I'm still deciding, but I've only got £80 in there as well. That's why I thought of it, because I got 80 quid in my Binance account. And I thought, what should I do with it? It's sitting basically in pound at the moment, and that's obviously not doing very well. Morning, Evans. Morning, A Prayers. I've no idea what the hell you've just said, but hello. Morning, Guna. Is it? I don't know what your name is, J3GM0194. Can you not change it to a name that's pronounceable? Might as well Bitcoin and to a cold wallet. Yeah. The stock market hedge EA sometimes does pending orders only on one side. For example, to down the DAX, but only buy stop orders. So sometimes trades are not able to get hedged. I don't know why that would be. The only reason that would be is if your broker doesn't allow hedging. Other than that, no reason why it shouldn't place both. There's a logic chain basically that starts there and goes through different things. And when it gets to a yes, you can place orders, it goes buy order, sell order, sell order. So it physically can't stop during that chain until it gets to the end of it. So there's nothing, the EA doesn't do this. It would be your broker for some reason. Check the logs or the expert tab. I haven't never experienced that, so I don't really have an answer for you on that one. I mean, you see me use it in here every day. It doesn't do it. So, but it's not done it to me so far, put it that way. Unless you haven't got enough liquidity. So check if you've got enough liquidity. Check your margin. Because if it places, margin shouldn't affect, these are pending orders, so it shouldn't affect it. Margin doesn't affect placing orders. So. Morning, Amar. Morning, Greg. Morning, John. I get paid by FC into Dust at Binance. Then I transfer it to my bank account. Binance not allowing that anymore. No. You can't withdraw in the UK in any shape or form to a credit card or a bank account. They are in trouble, Binance, because they are, again, binary options. It's all a con. The whole thing's a con. I don't care what anybody says. Cryptocurrency's a con. Goes up and down like everything else that is manipulated by fresh air. There's nothing that makes anything move in crypto. It's all fresh air and pumps. Yes, you can make an absolute fortune out of it if you're lucky enough to flip a coin just at the time it goes mental. But other than that, nothing drives it. Anyway, I don't do it, so I don't care. Maybe not enough leverage. Yeah, that's what I said, but I don't think it is that. Leverage doesn't affect pending orders. So not place the pending order when the open is already to be triggered. What do you mean by that? Will not place the pending order when the open is already to be triggered. I don't know what that means. I mean, John, you try. Let me know if you can get out of. I got an email from Binance quite a while ago, basically saying we're unable to allow withdrawals from UK accounts. And I was like, okay, I thought it was a temporary thing. And I've gone into my account today and there's two options to withdraw money, credit card or bank. When you click on both of them and press the withdraw button, it goes, I'm sorry, we don't allow this payment method in the UK. So you go, all right, fine, I'll go onto the bank account. Sorry, we don't allow this payment method in the UK. So what you're basically saying is you offer two payment methods, but none of them can be used in the UK. So how do I get my money out? You can't. You have to transfer it into something else and then basically Bitcoin or whatever, and then do a Bitcoin transaction from Binance to, I'm assuming this is how you do it, to another Bitcoin wallet somewhere that will allow you to take that money out into cash. The whole thing is shady as hell. Binance is under so many, it's had so many investigations, like my Forex funds, funnily enough. At some point it's going to vanish. And the bloke that invented Bitcoin is going to come out and go, nah, I've got your 750 quadrillion pounds, the world. Thank you very much. And the whole thing will collapse. Not a conspiracy theory. That is exactly what's going to happen. Mark my words. Look at it. Look at that Bitcoin spike. That thing spiked to 22,000 pips on a ADR of 761 within an hour for no reason whatsoever. It's just ludicrous. The whole thing's nuts. Look at it. It's just an absolute mess. I'm not worth anything. I'm worth billions. Oh, you're all bankrupt. No, I'm not worth anything again. It's just a load of crap. Nobody can tell me why that happened, and nobody can tell me why that happened. So until someone can tell me why that happened and prove it, yeah, it's like religion, this is. No one can prove anything. So until someone can prove something to me scientifically, it's a load of bollocks. As far as I'm concerned, which is why I don't trade it. Anyway, crypto, it's all good fun. Everyone's going to go, no, I made a fortune out of crypto. Yep, so did a load of other people. And then they lost more than they made. BlackRock and Morgan Stanley are pretty keen on Bitcoin when this spot ETF gets approved. I don't know anything about it. Same in backtesting. When the open candle is below the pending order to be placed, the pending order will get skipped. Oh, yes, I see what you mean. Yes, yes, it will. Yeah. So basically, if the market has moved beyond the level before you get there, it may or may not place a limit order, but that's down to your broker and what they allow. So yeah, I mean, if you've got a case where the market's moved so fast it couldn't get the orders in, then yeah, it won't place them. Today may have been one of those days. I don't know. My broker was fine, but I've had instances where I've had, the market moves too fast. So there's nothing you can do about that. It's the open. Sometimes the open is hideously volatile. Sometimes it's not, which is why backtesting's useful. But at the end of the day, you're not going to get the same results in a backtest because it's going to be different. Hopefully the stream holds up today, because for the last 2 days, we've had interruptions in the morning on the stream. So we'll see what happens. I'm just waiting to see if we get any movement on this open before I do the analysis on FX, because I just want to see if we get this low broken. At the moment, we're kind of struggling to go anywhere. It looks like it wants to break short, but it's we're really struggling to get enough volume today. So I may open another account. Future payouts. Yeah, it's all a bit murky. US dollar yen spike, is it? I don't seem to have anything on mine going anywhere. You still get your money out of Binance via the Binance card in cash. I don't want a Binance card. This is what I mean. It's like, it's all like, you can do this, but you've got to do this to do this. It's like, no, it's far too complicated and far too, dodgy. That spike to 3,600 reduced to a fake ETF announcement. Oh, right, yeah. Exactly. So, I mean, it's all... If you can manipulate something like that by somebody saying something completely fake, it's just... Biggest con of the last 20 years, I would say it's probably the second biggest con. The best one was binary options. That was the best one. Got a lot of people into trading, though, binary options, so that was a good thing. Mind you, crypto's got a lot of people into trading, but now they're realizing that they should really be trading assets that actually have fundamentals behind them and you can logically understand what's going on with them, rather than something where somebody says, hey, I've made a coin called Shibu. If you all go and tell Telegram about it, it'll go up. Whoop. Thank you. Oh, did you all lose all your money? I've got it all now. Come on. Binance card is actually great. I just sue Binance as a money hub. Use Binance as a money hub. US dollar spike, normal. Bitcoin spike, all a load of rubbish. Yeah, there's fundamental. If you've got fundamental reasons behind a spike, makes sense. If you got, I mean, mind you, that was a bit of a not so much a manipulation, but that was a news event. But that's just the market overreaction, which is basically what that Binance thing was, I suppose, isn't it? Market overreacting to news, which is what it does. Right, anyway, so we're not going anywhere this morning again. So I am short, but the target so far, so to our target in this propulsion gap is achievable. So this support here where we kind of stalled out a little bit. We slammed through it. We tried to get back through it. We failed. We came up, and then we slammed through it. So this propulsion move is kind of what undid that support. So this area here is a pretty good target. However, if we can get down into this propulsion move, which broke that high there, which was that support there, I'd be kind of watching for a buyout of this level as well. So if we can get down to there, it's very much the same as yesterday. Yeah, we pushed up, we pulled back into propulsion, we pushed up, we hit a level, and we stalled out. And I was like, and this is, remember yesterday I said, don't like the look of this. It's just not got any legs, and it's so slow, it might flush back the other way. So that's why I put that on there. So the same thing today. If we get down to here and I see this thing stalling out, I'll protect it. If I can grab 1 hour out of it and it's a slow market, it's a profitable day, isn't it? So we'll watch what happens. Looks like we're having another crack at a short now. So if we get this low broken, we're going to flush, depending how big the flush is. We'll hopefully be able to get down into these gaps, but we're struggling at the lows. I mean, it's just not enough sellers in the market today. There we go. So we've broken it. Not really got any volume. So we'll have a look at the FX market and see where we go from there. Yesterday, what did I do yesterday? 4% yesterday. So phenomenal month so far, 18% with the stock index hedge strategy. So good month. Very happy with that. Right. ADRs flat today. There is no ADRs. We've had no movement during Asia, as you can see. We've had very little anywhere. We've had a little bit of movement on the Aussie positive. The New Zealand dollar as well has had a little bit of a positive move during Asia, but other than that, nothing much else has gone anywhere. So we'll see where we go during London. There's no more news catalyst today. We've just had the news, which should be positive for the pound, but it's ever so slightly positive. It's not really enough, I don't think, to make the market suddenly go, oh, we need to buy a load of pound. It's just what it was before. If that had come out as a 6.8, I would say the Bank of England would probably have a little bit more to do with interest rates. But as it's a we haven't gone anywhere move, I'm not sure if the market's really going to look at it in a positive light. So we'll see what happens in London, but so far not an awful lot of movement. Okay, 1R break to the downside. We're testing propulsion. Although this is really tested, I would say this is what we should be looking at. This one here, this one's kind of tested and part of the same move, really. This whole thing here is the propulsion move, and then it stopped. Sellers tried to add, buyers bought back again. So this area kind of is done. I would say that really is where we want to start looking for buyers, but let's see if we can break down into that today. So yeah, so not a lot of move. Don't think we're going to get a massive amount of movement today, to be honest. Market is still in total fear mode of what's going on with Israel. It's getting to the point where, you know, they've been saying for a long time now, we're going in, we're going in, we're going in. They don't seem to be going in. Someone keeps bombing someone. No one admits to any of the bombing. It's all a case of every time we bomb something, we can blame them for it, and that gets them involved, and it all blows out of all proportion, which is kind of what is happening. So at any moment, it could flare up. So the market, when we have situations like this, tends to not want to really do a lot, because there's no point in putting any risk on anywhere, because that risk could immediately turn into a hideous decision. So things like oil and the US dollar, the Swiss franc, the yen, gold, they're all going to get massively manipulated if it kicks off. If it doesn't kick off, we're just going to sit there and go, not quite sure what we should be doing, because you don't know whether you should be buying or selling gold, because you don't know whether it's going to de-escalate or escalate. So therefore, you sit on your powder and you just basically try and make money on rotational movement. There's no news to move the market today. We've got nothing here that is going to really kick it off, unless Waller or Harker say anything later this evening. So next catalyst is this morning. So I'm not expecting a lot of movement today, therefore probably not a lot of ADRs. The only weekly we've got is Aussie New Zealand. That thing went nuts yesterday, 175 ADR. We did 126 off of a 62. That's 200 ADR. No, 112, sorry, we did. Roughly. So pretty much 175 to 200 ADR yesterday. Got a short on that yesterday when we hit it at ADR because that was an H1M5 mean reversion entry. So I'm looking for a push back down into that propulsion gap, this accumulation break. If it pushes up, obviously we'll scale into it, but that's really extended 150% of its weekly range. We're only on Wednesday. That's Monday. But this gap down obviously is why we've got that 150% extension. If you actually measure it from the close and ignore that gap, which filled very much instantly, we're actually 118 pips, which is still over the normal weekly range, but it literally was all done yesterday. And that was off the back of all the news that we had yesterday for the monetary policy meeting minutes and the CPI miss, or rather hit stroke miss from New Zealand. So I got a feeling that's probably going to undo. So I'm not unhappy with the short. If it does a 50% retracement on that move, though, it doesn't make me any money. So it's not a great position to be in, but there's nothing else there to look at. We've got a couple of monthlies, the Swiss yen and the Euro Swiss. Obviously, this is off of Swiss franc movement, which is the safe haven run that we've had. So we've had monthly hits on the Swiss yen, mainly because, obviously, actually, that was last month, wasn't it? Oh, no, it was on the 3rd. So mainly because of that 400 ADR spike that we had on the yen. So actually, that's the movement really on the month if you take that spike out of the equation, which kind of happened from there. So the actual movement up is 427. The monthly range on it is 627. So that's not really a hit. The Euro Swiss, however, is a hit, but that is mainly caused by the Swiss franc safe haven run that we had on Friday, which is now starting to unravel. So your entry on that monthly was pretty much there, and that was also a weekly, it was a daily, it was an ADR, it was an RSI, it was everything, wasn't it? So whatever reason, H4 RSI extension, it was everything. You were in there for all reasons, and it's played out very nicely. So, so there's nothing to look at there. RSI is the only thing we've got is the Aussie dollar New Zealand. I just saw that propulsion gap getting tested. So it's just so slow. I hate it when it's this slow because you get these, like, it takes forever, like 20 minutes, 30 minutes gradually going down. And all of a sudden, like yesterday, you go like this, like this, like this, and it just goes boom, boom, boom. And obviously today it's going to do that. So I'm just watching this like a hawk, watching for inside bars and volatility like this coming in, because the volatility, when it comes in fast, and you'll undo 15, 20 minutes worth of movement in one candle. So just keep an eye on that if you are short still. So yeah, Aussie dollar, New Zealand dollar extended on the 4 hour. That's above the 80 level now. Very, 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 very good level, the 80 level on the 4 hour. Yeah, so when we get to this 80 level on the 4 hour, it's unusual for us not to start a good 50% at least pullback on whatever move. That didn't really hit it. There, yeah, just about sort of there, but so yeah, very good level. So looking for a pullback on that at the moment. How far we get on that move, obviously, we'll have to wait and see. But as you can see, Aussie, New Zealand, they are very close trade partners. Each of their news affects each other. So you tend to just get sideways movement a lot of the time. There needs to be a real strong fundamental reason for one of them to be a lot weaker than the other or a lot stronger than the other for these two to come out of sync. I.e. Australia increasing interest rates, New Zealand reducing interest rates, or something like that, that causes this sort of movement. But other than that, at the moment, these guys are still stuck, proper stuck, with interest rates and inflation hideously high. So the Aussie 4.1, We got 6. It's coming down fast. New Zealand 5.5, 5.6. It's coming down, but it's slowing. Yeah, because we've just had a month tick up. So there's more room, I think, for upside on the Aussie than there is on the New Zealand, because their inflation is higher. And if we get the CPI figure on the Australian dollar, and the next CPI reading comes out as inflation slowed to nothing or ever so slightly ticked up, they've got another 0.25 on that easy. 4.35 is not going to harm them much at all. Unemployment's not moving. Everything's good there, so we don't have to worry about that. Their GDP is stable. Don't have to worry about that. If they want to get on top of that, they can move that up, even go up even higher than that. They go up to 4.6 if they wanted to. So there's more upside, I think, on the Aussie, but they're not going to do it unless they need to. So at the minute, it's totally sideways. You can trade it in any direction you fancy. That's extended on the 4-hour, and it's still just about extended on the hourly. So I'll be getting into a second on that if we push up. We've got nice resistance coming up, which is this 3-week high, which is really just part of that accumulation. So I will take a second on it if necessary. We've got the euro pound. We just have made a new lower low and a lower high on that, but we are starting to find a little bit of buying pressure. Euro pound, that's come down. So that was a 4-hour RSI extension. Only just your entry on that this morning was all the way up there, so you've missed that. Euro New Zealand extended on the 4-hour as well. Again, same thing. I've got sells on this already. I didn't get this third one on, which is really annoying. So 128. I needed sort of 60, 70, 80, 90 odd. It happened about 60 something. So I didn't get that third entry this morning because it's too close to my second entry there. So from that entry down to there is only like 65 pips, which is only half an ADR. I need at least 3/4 of an ADR to scale into my positions. So nicely extended. In a downtrend at the moment on the euro, although the structure is shifting back to the upside. This looks very, very, very similar. If you look at this price action here, it looks very similar to the pound US, but it's just done that. So the pound US has done this, and we're looking for that leg up. So that's what I'm expecting the euro New Zealand to do as well. So that move there, made a new high, pulled back, looking for that next leg up. So that's a nice extension to the upside. Your short obviously was this morning on it, 15-minute there. So coming down nicely. Target on this one, I'm looking to get a 50% retracement on the entire thing, sort of into that propulsion move there. But that's not really a very good propulsion gap. It's just kind of part of this grind there. But you got to target somewhere, and that's profit. That's where I'm targeting. Pound odd. Nothing scientific in it. Extended on the hourly just about. We've just had the reverse alert this morning off of the news, obviously. So not a very, it's just hideous reverse alert because it's just the news basically which caused it. There's a gap down there as well. Look. So that was extended on the hourly, but only just. Got out of the shorts on that one yesterday. This area of balance is basically where we may well start a new leg up on this one, but it really depends on what happens with the pound and what happens with the CPI. So it may well push up from here. It could well just push back down. This is all part of a big range. So you got this kind of big range formed there, and then it moved into a slightly larger range, contracted. It's just very methodical in its movement. So it doesn't really matter which way you get into this. As long as the market structure keeps like it is, you'll be fine on it. So if it pushes down into these propulsion gaps, be a good little buy out of there. So if it gets extended down here, I'll be longing it. But right now, it's not extended enough for me to get into. Might do, though, if it pushes down further. And New Zealand dollar Swiss is the only other thing extended. I've got longs on this one. This is a really tricky long, unfortunately, because we got... so the 4-hour extension is what we're looking at, which we got massively extended. So the New Zealand dollar had a bit of a downward spiral, and then the Swiss franc had a safe haven rally on Friday last week. So that's why you got that massive move. RSI extended way below the 20 level. I mean, we went down to, I think, 10 nearly. What do we get on that? 11.1. So huge extension. There's not actually any reason for this to pull back unless the war de-escalates, unless we see de-escalation in hostilities and everybody sort of calms down a little bit, because they will want to be buying the Swiss franc, which is one of the safe haven currencies. The fact that New Zealand dollar's just had a negative news event as well obviously hasn't helped. So it's tried to pull back and then immediately got slammed with negative news on the New Zealand dollar. So we got the Swiss franc strong, the New Zealand dollar weak. Obviously that's going to come down. So at the moment we are in a good pullback area if we're going to continue in that direction. But I would say probably more likely another leg down. It's very difficult to pick a support and resistance level on this until obviously you get back down into this area of balance, which we spent weeks in down at these levels. So you've got a very nice level here. And then you've got this double bottom, which is the monthly lows. So it's this monthly low and the previous monthly low, which is 225 ADR away from where we are. So unless we get some kind of rush back out of the Swissy, or the New Zealand dollar has some miraculous news for some reason, I can't see any reason why this is going to particularly want to rally unless we just have some weakness on the Swiss. So there's a couple of areas we might get reactions at, specifically that area there, because that was a resistance turned support, which is exactly where we've bounced from. So it could be the bounce point. If not, we're looking at it coming down. So it's not a very good trade, this, because of the distance between entries. First entry was there, second entry was there. That's way over an ADR. ADR on this is 46. Because of that collapse on Friday, it didn't give me an opportunity to get into another position until we were 73 pips apart. So pretty much 2 ADR, which makes it hard to get out of because it's got to push up over an ADR just to get me to break even on it. So kind of one of those positions, if we do push up into that high, probably just scrap it and go, it didn't work. So TP at the moment is up there on the hope that we suddenly get some weird, massive sell-off on the Swiss franc. It's the only thing that's going to help with that one. But I will scale into more positions on it. Obviously, if we do drop, because I'm long, I have to be out. So wait and see. So that's your RSIs and ADRs. That's pretty much all there is at the moment. Oil, gap up, obviously. So we'll see where that goes today. Knew it. Got to get hedged on the DAX. Annoying. Right. So hedge levels on this. Tricky today. So downside, obviously, I would leave where we are at yesterday's low. In fact, I'll probably move that up slightly to yesterday's lows there, basically, and that's the previous day's low. So this whole area, obviously, we know is being bought up, hence this big rally. Upside, I wouldn't want to really get out yesterday's high. I don't think it's a bit too close. So it's really hard to pick a level on this. We looked at this yesterday, trying to pick somewhere to the upside to get out. It's difficult to pick a level. We got this area here, which is basically this low and this high. So you could kind of encompass that into it really as well as a resistance zone. So that's probably what I would pick to the upside. It's not hedged yet. We might, this could be a ridiculously strong spike and we carry on market structure to the short. But that's probably where I will target with second entry. So we'll see. It's not hedged yet. So that's what I was worried about. You kind of get a feeling for it after a while. When you trade this long enough, you get a feeling. Difficult to explain it, but it's just so slow in its movement, and then you see some volatility kicking in, and this is exactly what we had yesterday. It was slow. It ground. The market movement was like that, very stable, very solid, and then we just didn't do anything. And you just get the feeling it's just going to go nuts in a minute, like this. Out of exactly where I said it would probably do it. Which is even more annoying when you get it right and you don't do what you said, what you should have done. But anyway, it's part of the frustrations of trading, isn't it? Morning, Seymour. XRUpdate.news morning. Nice short on the FTSE. Probably not now, is it? Might look into trading the FTSE. Yeah. Cool behavior of the SIH. Just closed my first position in profit. Good job. It closes all the buy stops and leaves the other sell open. Yeah. That's its job. If you take profit, that's it. Lock it in and hope you get a runner. Hoping for an end of week rally on the Aussie, on the New Zealand dollar. I don't really know why we would. We've got Aussie dollar news tomorrow. So for the New Zealand dollar, that's really the only catalyst we've got. We've got the New Zealand dollar statement of intent, but I mean, that might actually do something this week. Now that we've had the figures out for CPI, might get something in there that is a little bit different to what we're anticipating, but don't know. Not really sure there's any reason why we would get a run on it, but we'll see. We will see. So I'm just waiting for this hedge to kick in so I can adjust the targets, but it's just taking forever again to get anywhere. There we go, hedged. Okay, so TP's adjusted. So I'm just going to move TP down into that area basically. So upside, I'm basically targeting this high. So we could, one or two things is going to happen from here. If we're going to go long, we're going to get resistive there and we're just going to go into a horrible rotation a la previous days. Or we're going to break yesterday's high. And if we do, we're going to look for some resistance to the upside. So ADR is all the way up here in this accumulation. So this area here is the first area, if we break yesterday's high, that we should meet some resistance. It's a fair distance, but it's still got upside to ADR. So it's quite a risky exit. So I'll look to probably get out up there and then look to try and get another short on. Downside, just going to move the target up ever so slightly just within yesterday's low. So that's a much easier level to the downside there. We got this low from the previous day, which is this blue dotted line. Then we got that low, which is yesterday's low. So if we are going to just continue structure south, which I don't think we will, but I mean, we might do. If we can get down to yesterday's low and the previous day's low, we're going to find limit order triggers down here. So get out of the shorts and then hopefully get out on a pullback on that leg. Get out with some profit. We will see what happens. But at the moment, hedged, not going anywhere. Just a bit of a mare today. No volume. Oil. I'm tempted to close an oil out. I was watching this morning. The only reason being is we've got a gap up, and what do gaps get? Filled. Yeah. So we're going to be back down here at some point in the next 2 or 3 days. We've got oil inventories this afternoon at 3:30. So what I'm expecting to happen today potentially is just a kind of a flip-flop around up here and then them to drop it on oil inventories. And then when the gap's filled, get out with a rally again. So if you look at what I've got on this, both positions I've got are in profit. So this is the one I'm looking at taking off potentially. But I was waiting to see if we got a reversal alert on it, and we haven't. So basically we've rejected the gap fill so far this morning. So I'm toying with the idea of taking this one off, but I can't add another position on here because I've already got one there. So I wouldn't add on the gap fill, but it's kind of too much money to leave on the table, really. It's like $600 odd. So what I'm worried about is a big de-escalation in the conflict. I mean, that would obviously be lovely from a humanitarian point of view, but from an oil point of view, de-escalation is going to tank oil. So we've got Biden going over to talk. There's all sorts of stuff that might or might not happen. So I'm kind of a little bit tentative about staying in the position for a long period of time. I'd rather do what I did here, add it, get out, add it back on again, get out. If it came down, I would have added it back on again. Yeah. So I'm tempted basically to take this off. And then if it comes down, obviously this position is going to go into profit. But if it comes down further, I will add that position back on again. So it's just kind of rinsing and repeating, just taking profit, adding on, taking profit, adding on. And if this thing continues to go like this for the next 6 weeks, fine. I'll just keep making money out of it for 6 weeks. I think it's going to go, but gaps, we know, always get filled. Yeah, it's very, 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 very rare we get a gap that doesn't get filled. Yeah, it's just the market it has unfinished business at that level. Yeah, it fills them. So we've got one. Just, it screams bear to me. So when you're long on something and you've got a fundamental reason to go short, there's no point in leaving your longs on, is there? However, this is a different situation at the moment, isn't it, with what's going on in the Middle East. So there is a possibility. We had that hospital hit. Yeah. Now, all of a sudden, the Saudis and the Iranians are looking to get involved, and possibly the Iraqis as well. All control oil. Yeah. Restricted supply, continuous demand, higher prices. So it could be that we just do a gap and go, which is why I'm tentative about getting out of it. So I think what I'm going to do is I'm going to trail it, this one. I'm just going to put a trailing stop of 35 on it. So under the low of this candle. If it decides today it's a gap and go and we're going to rally, I'll just get dragged along with it. And if it then hits that high and then decides to come back down again, it's off, because I'm expecting then the gap fill to be done. If we flip-flop around like this morning and don't go anywhere, or we just have like many hours until we get to the oil inventories at 3:30 and I'm still in the trade, the oil inventories could rally and I could obviously make a lot more money. The oil inventories could also tank and fill the gap fill, in which case I also want to be out. So there's more reasons for me to want to be out of this at the moment than there is for me to want to be in it. I'm going to leave that one on because there's no point in taking that off, because literally it's going to go into drawdown by that much and then potentially rally again. So that's what I'm doing with that one. Just basically locking in some profit for the day, basically. So that sticks 0.5% roughly down there. Because at the moment, nothing much else is moving on the other positions. Because we are just doing this again. Market's just gone into sideways mode again, isn't it? Nasty. Robert, took all my profits short. Good. Have you, after looked at making some form of EA based on your WRB indicator? No. Yes, I have. Yeah. I have, but I can't. I've got a propulsion gap EA. But it's hard to get it working profitably. Basically, I've built the EA, which basically creates the propulsion gaps. Yeah. And then I've tested basically retests of propulsion. So this move here. Yeah. So propulsion gap formed. I've tested entering on the retest like that. Yeah. And it looks obvious, doesn't it? What an obvious trade. When it comes into the propulsion gap, does not fill the propulsion gap, and comes back out of the propulsion gap. When that candle closes, place a stop above the propulsion gap and go short. Looks obvious, doesn't it, on the screen? But what you will find is there are many instances where propulsion gaps just get slammed straight through like that. Yeah, there's 3 propulsion gaps there. What did we do? We slammed through it, slammed through it. It doesn't matter which one of those you took short. If you took all 3 of them, you're dead on all 3. If you took one of them, you're dead on that one. The number of times it doesn't do this and goes through it is actually higher than the number of times it bounces out of them. And this is why I use them as targets, because if I put a target here, yeah, and it hits that and bounces out of it, I've hit target. If it hits that and slams through it, I've hit target. If I'm trying to use it as an entry criteria, there's a 50-50 chance of it being effective. So I tried lots of strategy variations, using moving averages, using price action, using candle close, using tests and not candle close, just get in and out, using pending orders, limit orders. I used all sorts of stuff. I tested it for months. Couldn't find a profitable stop loss based strategy with it. Which is funny, isn't it? You know, stop loss based strategy is not working, which is why 95% of the population fail at trading, because they all use stop losses. They don't work because this thing will not do anything enough to, look, this one here, there's a brilliant example here, look. This propulsion gap. So one of the logics was, when a propulsion gap forms and we close below it, place a pending order there. So that if it comes and tests it like this, you get in and immediately get an opportunity to go out. Stop loss above the propulsion high. Yeah. In this case, this one, that would have worked. But look at, when you actually look at this, the strategy, that's your risk. To get a 1R is there. To get a 2R is there. So it's actually got to do quite a lot for the strategy to work. So then I tested, okay, if we have a high in the propulsion gap and the candle closes below the propulsion gap, enter there. But then look at the size of that stop loss. To get a 1R on that or a 2R on that is a big move. Then I tested, we have to close inside and then, so basically open inside and close outside. I tested that. That didn't work. I tested so many variations. I also tested filling the gap. So this scenario here, what happens when we either fill it, well, not fill it to the pip, that didn't work either, but it just wasn't enough instances. But when we fill a gap and then we close below the gap on the next candle, so this exact scenario, tested that, stop loss above the high. Sometimes what will happen is you'll get a gap fill where that candle will be a news candle and then the next one is a retracement. Your stop loss is like that. So I thought, well, let's then scrap that and use a stop loss based on ADR. So let's use a quarter of an ADR or half an ADR as a stop loss. So we have a fixed risk regardless of, because most of these propulsion gaps are never going to be a quarter of an ADR or half an ADR. They're always mostly smaller than that. So you're always going to have your stop usually outside of it, regardless of what entry criteria you use. It's not profitable because the market just doesn't work in that way. Look at that propulsion gap fill there. Beautiful trade. So we came back to, look at that, tested it, rallied away, perfect. Tested it, rallied away, perfect. Tested it, slammed through it. Not quite sure how you'd have got in, but probably worked. Every 3 instances I show you of it working, I can throw you 3 instances where it actually just blew straight through it and just didn't work at all. So the edge was, the P&L was like this. And you end up with something that's ever so slightly profitable. It just didn't work. There was no long-term edge that was that would play out. Because if you think about it, it's not a breakout strategy. And you could class it as a mean reversion strategy because you're taking a trade expecting it to go back the other way, but reverting into the mean of what? So do you only take them if there's been a big push? But then you should be doing that, not doing that. I tried to find ways of using them as targets automatically. But which one do you use? The closest? But what if the closest is not high enough risk reward? Well, then use the next one. Okay, but what if it bounces out the first one? Market just doesn't move in a logical way that you can use these things to build some automated strategy around. Tested the crap out of it for a long time. Probably got one in here. There you go, propulsion breakouts. There's one there, which is a propulsion gap breakout strategy. WRB positions, WRB tests. So these are the EAs I built to do the WRB tests. Yeah, they just didn't work. Couldn't make it work. But as far as using them for targets, perfect. You see me using them all the time in here as targets, and they're absolutely brilliant for that because we know they're going back there. We don't know where they're going back exactly or when, but they do. So that's how we use them. Morning, Franco. Yesterday, US 500 had a nice exit. Good man, Evans. Well done. I don't see that gap on my charts. What, on oil? It depends when your broker times are. So I have a 4-hour gap in the oil market. Seymour, I was thinking taking trades on the first opposite WRB that has a pip value of more than a percentage. So you're getting so complicated. Complicated strategies don't work. If there's too many moving parts, there's too many things that can be manipulated into a curve fit profitable P&L curve in a strategy tester, and they just won't work out in the future. But, you know, using the big ones, I tested it on different time frames. I tested H4 as well. You know, so this one here, look. Never came back and tested it. That one, right? Came back, tested it. Short, perfect. This one, never came back and tested it. This one, gapped up into it. This is oil we're looking at, so it's a little bit different, isn't it? But it did eventually come back and test it 2 weeks later, and you had a sell, but you're still in that sell because you haven't hit